Welcome back to the Capital Mindset Show. We are your hosts with the most, Austin and Fabio, and today we're going to be talking about Corsair. We're going
Hosts
to
with the most? That's new.
Yeah, what? You
You're
gotta
spicing
change
it
it up
up
sometimes.
Okay.
I can't ask you every single time, what are we looking at here today, even though you already
just
know
asked
to
it.
say it beforehand. All right, fair enough. But I didn't ask it. I
Yeah,
said it.
you talked.
I didn't ask it though. No.
Okay, fair enough. So,
But anyways, we are looking at Corsair today. We're going to be kind of revisiting Corsair a little bit. We're going to be talking about the stock, some of our projections with where the stock might be heading to, as well as sort of revisiting why the price isn't exactly moving, but it's now moved
remember
into our hypothetical buyer.
Remember what happened with that? So the stock price, what it do? Yeah, we posted it when it wasn't moving, and then it goes down. And then some we saw the Reddit users, because someone who watched our videos posted the video on there, and then we got a little bit ripped on because they were like, it is moving, it's moving down.
Yeah. The stock price is moving, it's going down. That's exactly what they were saying.
So the reason why we're making this video today, in case the audience isn't aware, it's because in the last video we made a somewhat of a small pledge, at least on my end. I made a pledge that, not a pledge, but like a soft pledge, that I would add or begin a position if it hit $23.
Well,
is that now, Austin?
Now it is at, if I show you here. Oh, hold on. You got to give me.
Are you banned? You're enabled. There you go.
Thank you. Now you can see that Corsair is at $23. Remember, stock go down.
It's not at 23 yet.
It's at 23.37. All right. I'm sorry.
Yeah.
Sorry.
I'm not
37.
I'm not adding it until it hits 23. But Austin didn't want to talk about this company at all. Can you be frank with the audience as to the reasons why?
As most of you guys know, I am a new investor to the markets. And when I first started to invest, well, I'm an accountant and I'm coming over to the investing side. But when I first started to invest, I searched up stocks to buy on YouTube, and I found Corsair, and I found, the guy with the nice jumpy music talking about how wonderful this gaming company was.
Guy with the jumpy music. I love how you describe him.
Yeah. And then I was like, you know what? I'm buying. So I made it a huge position in my portfolio. And then it was funny because when me and Fabio were putting this channel together, because we started in August, and we're putting this channel together.
Well,
Fabio's
let me explain a little bit how I am. So when you first meet me, I won't overtly rip into something.
Yeah, until he gets to know you, and then he just roasts you nonstop. So,
he told me he was in this position, and I just started asking him, like, oh, why are you bullish about Corsair Gaming? Just wanted to know. And remember also what you told me?
Book value or something like that.
I don't remember what you told me, but again, I'm not gonna roast you. You're just like, I'm subtle about it. So you told me, like, but what was the business that you were so bullish about? What was the name of that?
Elgato.
Okay,
that's what I was incredibly bullish about.
Should we tell our audience the
Of course. Well, I mean, you got to do it now. This is I'm already embarrassed.
No, but it's a wonderful story that we can all connect with.
It's a wonderful tale.
It's a wonderful tale
of the new investor.
But we were getting the equipment right for this video, and I said, hey, Elgato, they sell this camera, they sell this microphone, and mind you, so before anyone thinks otherwise, Austin knows his stuff with audio equipment. Okay, he actually utilizes a lot of audio equipment, so I would consider him to be more experienced, somewhat of an expert, especially in comparison to me in regards to that kind of stuff, and cameras,
those of you who,
microphones.
and for those of you who might not know, I'm actually primarily a musician. I'm a guitarist and a singer, so I have like a decent level of experience with audio equipment and how to use it. So
but
here,
this. So he repeats to me. He says, "Hey, so why are you bullish on Corsair?" And he says, "Okay, Elgato." And then they're getting into streaming. They're gonna, they have all these peripherals for growth, and Elgato is gonna be huge. And I didn't know at the time, or maybe I think I did. I might or may have not known that this individual that you got the idea from was also espousing those same ideas, and maybe that influenced those talking points. And this is the reason why we're pointing this out. And like Austin is being completely frank here, and you guys need to appreciate him for that, because this is his growth journey. He is an exemplification of, one, how far someone can come from that, and two, the dangers of starting in the market and meeting the wrong person. Okay, and then
it's true.
So it is dangerous. And I think like other channels have been talking about the problems of these other channels and the influence they're having over the investor base, the new investor base, and how that might shape things going forward in a negative light. And then that also was an inspiration when, I was discussing with Austin way back when we were first talking about starting this channel, the goals of this channel and what our purpose would be. So so Austin says to me, I say to him, hey, that company you're really bullish on, they sell microphones, the Elgato brand, and then they also sell cameras, the Elgato brand. And what was it you told me, Austin? Mind you, I'm taking Austin's opinion very seriously, because he utilizes a lot of equipment, and he was looking for a good price, good quality. And then what did you say, Austin?
I was like, no. Meanwhile, I have a position in this company, and it's a big position too, that I just invested, and I was bullish because of this exact thing that I did not want to use their audio equipment for.
Yeah. So mind you that I was questioning Austin. I was saying, why are you bullish on this company? Saying the Elgato equipment. And then when I presented an opportunity for us to be customers of the company, he explained to me that it was his opinion that the equipment was of inferior quality based on the price compared to other products. And I was like, oh, yeah, good to know.
So back to Corsair.
Now it's at 23. Has any of our thesis changed? Yes and no. Okay, so Elgato aside, Elgato can still grow within its niche, and it even though it may be of inferior quality to other products of similar price, or it can be just like slightly under, because remember, Austin might be a little nitpicky because he's more experienced with these kinds of equipment pieces that others might not be. Okay, so actually bear that in mind, that Austin's choice or Austin's decision in influencing our decision not to go with Elgato equipment was perhaps because he's a little more picky. And someone like me, who I would consider myself someone who doesn't know anything, right, about audio equipment, cameras, nothing. I would not know the difference. I would just look up a YouTube video and then listen to what that guy says in the review. And that may be a paid review. And then that person might say, Elgato is fantastic. It's the best thing ever. It's better than, these other cameras, or it's better, or their microphones are the best. So then I would just say, oh yeah, they're great. Because I don't know how to formulate an opinion, because that's not my area at all. Okay. Mm-hmm. So, they still may succeed in that. We've discussed that. We've also discussed a little bit about their business model, right? So their business model is a lot of, we call it, and I know that may, trigger some people, because it's technically not by the technical sense, but we call it like a souped up version of drop shipping, right? Why do we say
a premium drop shipping?
Yeah. Basically. Why did we call it that, Austin?
Well, because they produce most of their products outside, and then they just slap their logo on it and then give it to consumers, which actually, I also want to put this up too.
Yeah.
If you couldn't tell, I like to play PC games as well. Not as much anymore as I really used to, but
It wasn't your
I used to be
past.
like, yeah, it was in my past. But I used to be pretty big into like the PC building community, getting the peripherals, buying the parts. And there was kind of a consensus amongst a lot of gamers that Corsair were overpriced and bad quality for keyboards, mice, headsets. But then when it actually came to like building the actual PC components themselves, so your PSU, which is your power supply unit, your RAM, Corsair products were good. So there kind of seems to be almost, now this isn't a universal or a unanimous opinion held by PC enthusiasts. However, I did kind of notice there was kind of a tension within the brand itself between the peripherals and the actual PC components themselves. So I just thought that that was kind of interesting to note here, because the reason why I'm not selling Corsair is because I actually legitimately think they could capitalize on the growing video game industry by their PC component parts. That's actually the part that I like about their business, if I'm being completely honest with you. Peripherals, if Corsair was only a peripherals company, I would not own them. Me personally, I would not own them. I would sell out of my newbie position. But yes, yeah.
No, and Austin, so this is kind of like a raw discussion between me and Austin. So I'm going to add to what he's saying. And I actually, at this point, would tend to agree with him. And Austin is formulating entirely his own opinions. So this video is actually serving as kind of like a rationalization and to kind of help serve the newer investor coming into the market, and help you kind of explore different ways about thinking about it, a company or an investment. And a lot of new investors are invested in this company because of these individuals who talk about the company.
I love it. The jumpy music.
Oh yeah, the description. Yeah. So let me actually move me there. So they may be looking at their position and saying, do I sell now? We're not going to tell you what to do, but we're going to use Austin as kind of like the proxy, right? So Austin is rationalizing it beautifully. Okay. He's not being emotional despite being down. It's not the end of the world. It's not the end of his portfolio. He's going to continually add to his portfolio, continuously contribute to the positions he has, his different ideas. He doesn't have only Corsair as his idea. It's not a tremendous amount of his portfolio. When he was being aggressive when he said it's like a lot of my portfolio. It's not really.
Yeah. No. Yeah. It's not like a big.
You'd be surprised.
That was kind of an exaggeration.
Yeah. But with regards to, a lot of people simply thought this was a fantastic business, and I didn't know why. Like we got attacked for questioning it, and I did not know why. I mean, I said that this business is not like, it's not terrible, but it's not a like a
S tier.
Yes, that S tier business, that prime steak. It's kind of like, it's a good business. It lacks the ability to really defend against competitors. I think I said in the original video that I preferred Razer in a lot of ways, and Razer's about to go public, but the two businesses as a whole are not in a good industry. But like, if you force me, I mean, now the prices, maybe it's changed, because I did say, based on my assumptions, the $23 was where I started to get interested. And I did believe I said somewhere in the mid-teens is when I actually said the business started to present an interesting opportunity and a good risk profile. And then we did discuss some of the risks that, for example, what Austin discovered, and this was actually Austin's legwork, right? So he discovered that a lot of the tenants with regards to Eagle Tree Capital, right? You discovered that little nuance, and then you came to me and we discussed the problems or the continued pressure this company would have until perhaps 2023, 2024.
About that, yeah. But some people kind of misconstrued what I was saying, where I was saying,
please explain that further.
Shares until 2024, and that's not what I'm saying. What I was giving was just like a general overview, and I'll link the other video that we made in the description. It's really like a comprehensive DD that we put together. But I was basically saying, because of some stipulations that I was seeing, I would not expect Eagle Tree really to, I don't even know if sell off is the word that I liquidate their position until roughly about 2023 or 2024. Now, I could be completely wrong. I could be completely wrong, and I'm okay with that. But these are the assumptions that I was making as to why the price at the time we made that video was not moving. But now it's actually getting into a pretty interesting range, specifically because of the fact that the reason why I refuse to sell the company is because I actually do believe, because I use and I appreciate and I love their actual component parts that I built my PC using. So
no, and also as the prices come down, the risk profile inherently by default has come down as well. So now would be perhaps the wrong time to sell. So, and if you continually are adding capital to your portfolio, you need to rethink this. Is there structural damage to the business? Is the business in decline? You may have bought it, right? You out there may have bought it at the wrong price. We discussed that. We discussed the potential. And I think we were discussing that. Did we make a video when it was in the 30s? I don't think we did, but I think we did make the video in the high 20s, I think. Can you check that while I'm keep talking about this? But there is that discussion or that inner dialogue you have to have with yourself if you're invested in this company, whether or not the thesis has changed and whether or not you are comfortable with sticking through the entire downturn, right? So this is, again, why retail investors can sometimes underperform the market. It's because they buy at the wrong time and sell at the wrong time. So you need to be cautious, right? I'm not saying that actually sometimes it's never good to sell a company when it's down. It's actually, no, that's not true. It's entirely depends on whether or not there was structural damage. Exactly.
Yeah,
we say this
really
a lot.
Comes down to nuance.
In our videos, but yeah, it's entirely nuanced. So I did say at $23, I would build a position, because just because I said it, so I have to stick to my guns. And I did add that with the added caveat that if the fundamentals didn't change, which I don't think the fundamentals have changed. I think they're more or less the same when we first analyzed it, but I did say that it would be just a nibble. So it'd be an ancillary position, something that if it were to go away, get bankrupt, I wouldn't even care about it. So
yeah,
I am not adding that because it's not $23. But
once it hits 23.
Yeah. So you will know if it's 23. Up, Fabio a Capital Mindset bought Corsair, but it's not going to be like one of my gems of the portfolio. But if it continues to downtrend, and if the fundamentals change in a more positive way, then my opinion tends to change when the facts change. Okay.
Yeah, and that's kind of another, we're really bringing up, or we're really kind of touching on an interesting concept, which is sort of, I don't even know if I can really call it an investing mistake, but it is a mistake of sorts where I jumped the gun too quickly on hype. And because of that, I basically kind of screwed myself. And the way that I look at this and the way that I learned from this is just basically disregard hype. But if the hype is intriguing you, do your due diligence. Don't do what I did where I'm just like, oh, buy. But
the thing is, when you are new, no one's there to tell you that.
Yeah.
And depending on the personality you come across that, is high energy, maybe you consider entertaining for whatever reason, can present an argument in a way that for you makes sense, and then you therefore agree with, and then you develop a bias towards the argument, and then you start to develop emotional attachment to the
married to the company.
Yeah, and all these new beginner problems start to stack up. And then remember, if you get accidentally correct, that's one of the worst things that can happen. Howard Marks talks about that. So when you're when you're right, I actually say this a lot in our videos. I mean, I said this in our Alibaba video. Being right for the wrong reasons is almost as bad, if not worse, being wrong. It can be very bad. I think I mentioned also in our other Activision video that just came out, being, again, right for the wrong reasons is almost as bad as just being wrong. So try to absorb that statement for those of you watching. And it's kind of like, if you're new and then you make a silly investment and it goes right, you're going to think you're a genius, and then you're going to try it again. And the process you developed is not repeatable, right? And because the process is not repeatable, you're going to stumble the next time, and maybe you do it with more capital and it's going to be more damaging, right? So yeah, so for what Austin's describing here is not a isolated phenomenon. It's a completely natural thing in someone's early journey, unless they have someone who can catch them before they do something like that and say, hey, let's not get carried away. And oftentimes, we talk about this too with the Overton window in psychology. If you, for example, know someone that is brand new to investing and they're already infatuated with these companies, you got to be very careful, because in terms of how you try to help them, because if you try to talk to them and you're talking outside the Overton window, you're going to lose them. Off. Yep, the mind just turns off. So they're not going to listen to you, and you're not actually going to be effective at helping them, unless, if you truly want to help them. So you got to be very careful in how you come at this, because you got to understand from their perspective that they're already emotionally attached to the company. And that's typically something that's indicative of someone who is new. But believe it or not, investors who have been in the game for a long time also can get emotionally attached to companies as well. Or emotionally attached to processes that are obsolete, which is actually a bigger problem for investors, because as we get older, we can become a little bit more stubborn. So processes can become obsolete just as much as companies, individual companies, because the process is more detrimental. Because you don't have a process or a strategy, what do you really have in investing? So let's take a look at the model.
Yeah, and like even before we kind of do that too, that's kind of the other reason why we started Capital Mindset too, is it's sort of documenting my journey as an investor, as well as just sort of relaying some things that Fabio's learned through investing and that I've learned through accounting, and just kind of combining all that together just to kind of create a space where we believe that we could provide value for our audience out there. So
try to leave a positive mark.
Yes. Yeah. Let us move to this lovely model.
All right. So with Corsair Gaming, right? We this is kind of like a reminder of what we looked at in the past. I can see here that the average growth rate, we have the new features for the model with us today. We can see the nice smooth curve, right? The smooth curve.
That nice trend line.
Exactly. It's nice. All right. So this is not so good, right? I don't like to see that, but we can see what happened here. Wow. Look at that. 2019 to 2020. Wonder what happened there. Okay. So but sales are continuing to go up and up and up. All right. But cash flows, something's going on here. Maybe something to watch out. All right. So average growth rate of 28%. All right. If you assume that's going to continue going forward, have at it. There you go. Right there. $31 buy price. It's undervalued. Discount that a little bit more. Not so fast.
Yeah.
So just when you thought they're like, it's a buy. No, not so fast. It depends. Depends on what your expectations are. If your expectations are 15%, sure, have at it, go crazy. But for those of you who are like, you're the 10x crowd, it's only 300%. Okay. So, that doesn't excite you. That's a good return, right? That's 50% above the market average, which I have a problem with that assumption, but it's 50% above the market average over the course of long periods of time. So, that can be good, but again, that's assuming no margin of safety on that specific assumption of, 50% beating the market. But yeah, that's kind of the assumptions here. I think when I came up with the 20%, so revisiting my rationale, I do believe that they could hit those marks of 22%, right there. And then that's actually the buy price was around 14 bucks. But I wanted that extra margin of safety. And in that sense, and I wasn't assuming share dilution, which we can see here that they have, well, That's actually not correct. It's something that in their financial statements that they're returning, but technically as a public company, they have not been buying back shares. They've actually been diluting shares. So, but going forward, I'm not just going to assume that. I'm just going to leave that ambiguous or remove that, and just assume the same shares remain. If we're being realistic, they may dilute a little bit more. Should I go over to the audience? Because I know some misinformation has been spread, and there may be new people watching who may be questioning, why would they dilute me?
Yes, I definitely would. I was about to ask that myself.
So there has been some creators out there who spread some misinformation because they do not know better about share dilution, and when a company does not require or need to dilute shares, that they won't. No, that's not true. So basically, what you got to put it from the perspective of management. Management is going to try to do what they can to lower the weighted average cost of capital, and there's a couple ways you can do that, because the weighted average cost of capital, it's literally, think of the cost of capital to grow the business. They're going to take the cheapest capital, right? And if they don't, that's a hindrance to you as a shareholder. However, there's a couple ways to look at this. So some people might say over the short term, lowering the WACC may not be ideal in the sense of using equity, because if you truly believe in the long-term potential of past investments and current investments, you're going to actually be paying more for that because the earnings of the business will grow faster. But there's a little more nuance than that. But that's kind of like a brief overview on that. And then there's debt. So basically, equity is competing with debt in terms of its cost. So debt has a interest rate. You can think of that as a cost. And then the equity has a cost as well. And you can think of this as expensiveness, right? So the more expensive the equity is on, for example, a cash flow or earnings basis, the cheaper it actually is to use the equity for capital to therefore invest. Okay. So that's how you have to think of it. It's actually topsy-turvy. When the equity is expensive, it's cheap as a capital source. And then when the equity is cheap, it's expensive as a capital source. Okay. Mm-hmm. And then so the debt kind of coincides with, interest rates, credit risk, et cetera. So you want to balance the two and try to get the lowest WACC, right? And then from there, you can profit from the delta between the return percentage you're going to get on the investment and the actual capital, right? So the return on invested capital is sometimes a good measurement to use. And so you take the return on invested capital and you measure that to the WACC. And then if you see a difference between there, the business is actually being efficient, right? In its use. It may have optimization issues. An example would be maybe they could, use more equity, or they could use more debt, and they could lower that WACC and then profit at a greater delta. But for example, the source of the capital matters because that's your cost. And then what you invest in it is a separate matter, right? So you want to have obviously the highest return on the capital and also the lowest cost of capital, right? That kind of makes sense. Lowest cost, highest return. The delta between that is your gain, your benefit. So all that being said, no, that is not true. That simply when it's cash flow positive or when they have tons of cash on the balance sheet that they're not going to dilute you. That's ludicrous. There's different goals and different stages of a business that they're going to want to do. If there's a lot of growth initiatives, they may want to dilute the shareholders because it may be cheaper to do so. Okay, so anything's changed for you, Austin? You got new capital coming in. You're gonna add to your Corsair position?
If it moves under $23, then yeah, I'll probably nibble a little bit into my position. I have other positions in my portfolio though that I'm frankly more excited on putting more of my capital into.
And that's a portfolio allocation strategy. Precisely.
Yeah.
So at any given moment, you have capital coming in, you have to make a judgment call. Your position at the present moment may still stand to benefit. It's for example, just because, for example, I am not bullish on the company doesn't necessarily mean I'm also simultaneously bearish, right? People, misconstrue that. So like the company can do well, and I actually think the company will do well, right? I don't think it's a declining business by any means. I actually, like I said, despite Austin's judgment call on Elgato products, despite we didn't become customers, again, thinking from the perspective of most consumers are kind of like me. They don't know what's the best mic. or maybe the difference in mic is marginal and I'm not going to notice it. And then the difference in the camera is I'm not going to notice it. And I'm going to probably watch YouTube videos to review the product. And, you know, it's a paid advertisement basically because it's a paid review and they may be a little bit more favorable to the product. I won't know the difference. I'm probably going to buy. A lot of people are probably going to buy those products. And also the design, a lot of people, you know, will forego slight performance issues, right? Slight little performance issues, because we're not saying, obviously, you wouldn't say that they're terrible, right? No, by any stretch.
Terrible.
You're just a little more picky than the average consumer.
Yeah.
And the from there, you know, you would say, well, the average consumer is not as picky, and maybe they'll go with the cooler looking mic, which I think the Elgato products do look cool, right? There's no denying that.
I would actually agree that aesthetically they're very pleasing.
Yeah,
it's just, you're right, I am picky.
But maybe you know, like the average consumer is going to say, I want the cooler looking microphone or the cooler looking camera. Mm-hmm. So
if it's a mic, it's a mic and it works. So I'm going with the one that looks the coolest for my setup, which is also completely valid as well. You can think
exactly. By the way, I think a lot of the Corsair bulls, if they made it this far, congratulations. You heard me rip on it, and then now I'm kind of giving you like the full-fledged opinion. So because now you deserve it.
Yeah. Oh yeah.
So no, it's a great company. And while I may not be bullish at the current price for my portfolio, right? That does not mean I'm bearish by any stretch of the imagination. I wouldn't bet against Corsair. Okay. I would not be shorting the stock. I think the short interest rate, I'm going to show everyone on the screen. Let me see. Seeking Alpha likes to have this information. 34%. Wow, if that's right. So there's 34% of the shares are short. You know what? I'll say this. I changed my mind a little bit because, again, I'd say shorting the stock, unless there's some hidden skeletons that I don't know about that the shorts know about, I'd say is rather foolish and can be an interesting short-term play. So now I'm going to consider, this is fairly new, this is raw, Austin. I'm actually going to do some research tonight after we finish with our filming schedule. And I'm going to research some potential scenarios for some call options. Yeah, that's completely raw. Like I just decided that I'm going to decide to do the research for it. And I may add a call option to the portfolio to see, you know, it depends. It depends on a lot of factors. I need to see how expensive they are. But I may add a call option to play that potential. And you know, with a call option, basically, if those of you don't know, we never did a call option video, but we did get a question, and I want to address that in a separate video about some of the strategies we employ, or that I employ, and then subsequently you'll employ.
Likely, yeah.
Yeah, that you utilize options to kind of cover some downfalls, or to enter positions with a little bit of leverage with not putting that much capital down. So I think that Corsair could be one of those, and yeah, just potentially as a short-term play based on that. And when I say short-term, I'm still talking about like maybe a year out, 2 years out. So for some people that's a long time, but you know, that's not really that long.
In the grand scheme of investing, that's definitely short term.
Yeah, that's definitely that's a short-term play. So if I buy a call option for 2 years out, that's a short-term play.
Yeah. Well, without further ado, do you have any closing thoughts, Fabio? Before I wrap up?
If I do that, I'll be ranting. You know, we don't want to rant anymore.
True that. Well, I think my opinion on Corsair has still remained the same. Price drops below 23. I'll nibble into this position a little bit more. Have no plans to sell right now. I do actually believe that there is a pretty credible bullish thesis in regards to Corsair and what the business could do into the future. So without further ado, if you guys have liked what you've seen here today, please be sure to share the video. It really helps out the channel. Please be sure to visit our website at capitalmindset.org and to like, comment, and subscribe. We're your hosts, Austin and Fabio, and take care.